Hey, we're coming to you from my lodge. Welcome, guys. Welcome to the stream. We're doing some live Q&A. Whatever questions you guys have, obviously shoot them down in the comments. We got our 30-foot ceilings. We got our lake views. It's a beautiful lodge, beautiful property. Glad to be here with you guys today. What is going on in the world? Monday, we had a 6% NASDAQ open. The market closed down 6%. It was unreal. I hedged, and I shouldn't have, but I hedged. And yeah, so that happened. If you guys are in the chat, let me know if you can see it down below. I don't know if my internet's working out here at the cottage. I think it is, but just in case, jump in the comments and let me know. I think it's frozen. My timer isn't even moving, so I don't know if you guys can see this stream or not. Guys, let me know if you can see it. I don't know if it's even going live or not. My cell phone data is not very good here, so hopefully the internet is working sufficiently. You guys, maybe go closer to the Wi-Fi here. You guys can hear me better. Can anyone hear me? Hello? I'm close to the, there we go. Okay. It's connecting now. It says connected. Sorry about that. We'll do the live stream here in a sec. Just trying to connect it to the Wi-Fi. If I walk over here, do I lose connection? Let's check it out. I got a new phone too. I got a new iPhone 15 Pro for you guys, so I can give you that liquid fast streaming. But we're out at the lodge, so again, I don't have an idea whether or not it's going to work. Oh, someone says working. Perfect. Okay. What else has been going on? So the NASDAQ collapsed 6% on Monday. And then for the VIX, the volatility index, Chicago volatility index, the VIX spikes when there's uncertainty in the world. And we went from a score of like 12 to 67. We broke 2008 records. We broke the pandemic COVID levels. It was unreal. I thought the world might end on Monday. It was pricing as though the world had ended. And of course, the world didn't end. And of course, everything goes on as it should in the world. And we're fine. You know, the market rallied up. And now today it went from, I think it was up 2.2% at the high today on the NASDAQ, down to almost 2% after hours. So we've seen a 4% reversal today. Just a weird world we live in where the market swings are like 4% in a day. 4%, like we're talking $1 trillion valuations, just reminding again why it's important not to watch the stocks, why it's important to have a balanced portfolio that doesn't include leverage, that you're balancing your assets across many different asset classes. For me, real estate is a standout. Like that's just, for me, that's a clear winner. I like to invest in real estate for that reason. I just like the lack of volatility. I like that I can't get a price. What's been going on in my world? So out here at the lodge, just getting things ready for guests. We have it booked for, I haven't been able to use it at all this year, actually. It's been booked for $1,000 a night the entire summer. But we had a cancellation for 4 days and we're like, oh my goodness. Like we finally get a chance to use it. And it's of course only last minute that we get to use it because we're kind of stuck relying on, whatever it is that the calendar gives us. So anyway, we're here enjoying our lodge and it's beautiful. I'm getting a chance to do some repairs and maintenance on the property and hang out with the family. So yeah, it's been good. What else is going on? We're closing a couple more deals. I have another property. We picked up a duplex in Sarnia for just under 200 grand, 199,000, which is a well over 1% rule, well over 1% rule coming up. I've got another one that I'm negotiating on right now in the low 200s, which again have like a 350, 400 valuation. So it's really nice to be able to get those properties for 60 cents on the dollar. We've got the biggest deal I've ever done in my career closing shortly next week. It's a $10 million project, which has a hotel on it now and is going to have a huge land development component to it as well. So I'm super excited about that. It'll be hotel number 6 that we're adding to the portfolio. This property is 26 units currently, but has potential to be 200 units. 10 acres of land, beautiful property just outside of London, Ontario, not too far of a drive away. So I'm excited about that project, be able to bring that to fruition. Hopefully bring some of you guys along for that project because I will need some capital if I'm going to develop it to where it needs to be. I don't have pockets deep enough to take it all the way there. So that's an exciting one as well. Good Cool. Okay. So it's connecting. Okay. I can see people jumping on the stream. I see it's live. Obviously, people get the notification, jumping on. Uh, Alfred says, what do you do to have so much capital? Is your father or mother rich? No. For those who've been following along for the last 6-7 years, I've grown a ton just in the last 6-7 years of going live with you guys, but I started with nothing. So at 17, I got a full ride scholarship to Western and Ivy, top business school. I had like a 99% average, so I got pretty much full ride scholarship, thankfully for that. I didn't have the money to even get through school, but I was able to excel with my hard work and grades and whatnot. But I bought my first property when I was 19, and I lived in it for free, and I renovated it, and I had 4 roommates that paid the mortgage, and we began saving. And so that was how I saved my first 100 grand. I was just living for free for 3 years. My first house, I refinanced it, bought a second one, then sold that, bought 2 more, then sold that, bought 2 more, then refinanced those 5, bought 5 more. This is in my young 20s. I just started buying properties. I'd fix them up, work. I was working a full-time job, and at the same time was able to basically save all of my income because of the tax deductions with real estate. I didn't pay anything. So if you're renovating properties and stabilizing assets, you get significant tax write-offs that cover effectively all of your tax liability from your job. So I was getting tax-free income from my day job because I was deferring those losses for when I eventually sell properties that have a capital gain on that. But deferring it and kicking can down the road, got 17 properties on my own, and that's when I started partnering, and I quit my job and retired. And I started doing JV partnerships and stuff, and I blew up. We did like 50 properties in a 18-month span. It was, a lot. It was a lot. But yeah, what else can I tell you guys? I've done a lot of cool projects now. In the last couple of years, I started to sort of venture off of different asset classes, obviously some crypto, some stocks and trading and stuff, but real estate's still my bread and butter. It's still the main thing that I do. It's still the thing that I'm best at. Like, the stock market is a hard place to have a competitive advantage or an alpha. Like, I went to the Rich Ivy School of Business. I graduated top quartile of my class. I'm a very smart guy. I have a degree in finance, and I still have no fucking idea where the market is going to go next. Like, none of us do. The smartest guys that I know who work on Wall Street, I'm like, yo, what do you think? They're like, fuck, I have no idea. Like, we just live on spread. Like, we just literally arbitrage small amounts of shit and like massively protect our risk. We have no idea. Like, the smartest people who spend 100 hours a week doing this, they still have no fucking idea. So none of us can ever have any idea of where things are going to go. It's important, if you're going to invest in the stock market for the purposes of diversity, that you buy a collection of all of the stocks and you don't leverage. You hold that portfolio with a very small amount of leverage. And you don't worry about the price fluctuations. When things are down a lot and things are bad and there's a lot of fear in the market like there is right now, the fear greed index right now, I think, is a score of like 17 on the extreme fear. So this would be statistically actually a good time to dollar cost average down. If you beta test only buying when it's extreme fear and only selling those same positions in extreme greed, your portfolio will actually beat the market. It's one of the few gauges we have. And even that's been sometimes back tested and failed. So, but it's the most reliable, I think, of the gauges, is looking at the VIX. No one has ever bought stocks with a VIX score above 50. We had 67 on Monday. The VIX score above 50, and 6 to 12 months later, lost money. Like, very rarely. And if you go out 3 years from that point, never lost money. So, whereas if you bought at the top of the market, there's been periods where you go 5 years where there's been no appreciation because you bought right at the top and it took forever to come back. It always does come back. If you're in the long direction, you're fine. Shorting's a different story. Don't short, guys. That's, just don't do that. Someone says, have you closed your shorts? Yes, my shorts are all closed. So I am not short the market right now. I'm actually long the VIX. My few positions that I have are fully shorting the VIX, sorry. So I'm long the market by shorting the VIX. I believe that the volatility index will come back down. I think we'll see a score of below, or a ticker price of below 20 on the VIX. I believe that the world will continue on. And those people who are, like, if you're going hard long the VIX, meaning like you're short the market effectively, and you believe the VIX is going to keep spiking up, it's a crazy trade. I mean, you got to brass balls. Not something I'm going to do. I don't want to risk that much with it. But I'm hoping to close my account. So I think I'm going to stop trading entirely. I'm at a point where like it just drains so much energy. And I'm taking on all these new hotel projects and motel projects, and I'm trying to gear up the real estate portfolio again. And that's taking a lot of my mental bandwidth away from that, right? The trading is taking away from that. I'm looking at my phone, watching to see what the VIX is doing, watching to see what the NASDAQ's doing, chatting with a bunch of friends who are in my like trading groups that I'm part of. And it's like, and even just chatting with friends and stuff, it wastes a lot of time. Like I probably spend 40 hours a week chatting with people, thinking about things, executing trades, doing research. And it's not netting me anything. I'm not beating the market. It's very hard to beat the market. There are over a 10-year or 25-year period, if you just look at all the traders, like 99.9% don't beat the market. They would have been better off just buying the S&P 500 all in and not looking at it. So suffice to say, unlike in real estate though, like real estate, if you buy a REIT and you buy a collection of properties inside of a REIT, and you compare that to a landlord who goes and buys their own properties and manages their own stuff, the returns are triple over the long term for owner operators. So there is an advantage in real estate. There actually is arbitrage that you can't do in the stock market. You're competing against the best of the best in the stock market who have algorithms that are basically like just making sure that any trade you take is probably going to lose for you because they've already taken the other side of it. And so the market makers are going to win in the end. You're not going to win. That's the general consensus, is that like in business and in real estate, you have an edge. And so that's what I want you guys to do. If you're watching this, you should definitely focus on the thing that you have edge on, that you have a performance advantage on. And for me, that's real estate. Like I can go in and negotiate on great deals. I can put financing together. I have that competitive advantage in a way that I don't in the stock market. And so my ego, right, thought that, hey, I'm really good at this one thing, so I'll also be really good at this other thing. And like, it's so hard. It's so hard to have those skills be transferable. Like in real estate, you can't check the price. Emotions don't matter. I mean, they do, but like they fade, right? If you're really pissed off at a tenant on a property, you don't just panic sell. You don't click the button to sell the property. It takes months to prepare a property for sale and then eventually sell it. It gives you time to think through, like, am I making the right decision here? It allows the analyst brain to come through and make a well thought out decision. Whereas in the stock world, and also in real estate, there's no margin call. In fact, if you buy properties and you go through a 2008 scenario where you're levered up on those properties, you can apply leverage to real estate and there's no margin call. The bank doesn't want your properties. Like if I have a portfolio of a couple hundred units, the bank doesn't want to foreclose on me. They might even call me and say, hey, Mike, we know we're going through a recession. We see you're struggling. We'll drop your interest or we'll forgive payments so we don't have to foreclose. Please don't give us these buildings. We don't want them. But in the stock world, you apply leverage. They want your shares. They'll liquidate that shit and blow it out at the bottom and take cash and make you pay. They'll make you pay a massive fee to liquidate it, and they'll basically liquidate you at the very bottom. Where in real estate, they won't do that. In business, they won't do that. If you have loans against the inventory in your business and you fall behind, they don't want to take your inventory. They don't want to take control of your business. Your business is worth nothing without you in it. So you have the advantage on the lender. The lender doesn't want to pull the stock. But in highly liquid markets like the stock world, when you apply leverage, it's very dangerous. So real estate and business is a safe place you can apply leverage, and leverage is what makes real estate attractive. Like if I was buying real estate in cash, guys, unless it's a really short-term project, like a flip or something, I might do in cash. But if I'm holding a project for more than a year, I do not want to have my own cash trapped in that. It is a sinkhole. Real estate generates an ROA, or return on asset, of between 6 and 10%. But with leverage, when you borrow at, say, 5% cost of debt, and you amplify that on a 10 or 12 ROA deal, return on asset deal, the spread there between 12 and 5 is 7%, right? You got a 2.5% mark, a 250% markup on the debt. When you lever that up 5 to 1, all of a sudden your returns are 40, 50, 70% annualized. Then it gets really sexy and attractive, especially appreciation. When you get a 5% appreciation on a 5 to 1 levered asset, you get 25% jump on your return on capital, right? 5 to 1 leverage. That's where real estate's sexy. And when you can play in that space and go talk to a wholesaler who's got a property locked up for 60 cents on the dollar. Like imagine if I was connected somehow that someone could call me and be like, yo, I have shares of Apple that Granny's selling for 60 cents on the dollar. She doesn't know what she has. And I could go buy that legally. You just can't do that in the stock market. It's somewhat efficient, right? It is irrational. It does move way away from price to book, and fundamentals mean very little. Eventually they mean something in the stock market, but for periods of time, like Carvana, as an example, is trading at like a 500 future PE ratio by their own forecasts. It's nuts. Full corruption. I'm surprised the SEC isn't up their ass. They literally don't even follow GAAP accounting principles in their financial statements. And they literally say like, fuck, we're diluting shit. Like just terrible. Their own sister company buys their own inventory to bump their own. It's just crazy. Look at those financials. You would think that company's going to go to zero. The company's up 400% in the last year. 500, 600% off the bottom. It's gone 6 times up. Again, the price has nothing to do with the underlying value of the business, what the business is doing, what it's actually worth. That's crazy to me. It blows my mind that the world's that was something that I couldn't understand. Like in real estate, just because a property sells, like 3 houses on the same street, one sells for 500. If your house is the same, yours is worth 500. But in the stock market, 2 businesses, the same cash flow, same fundamentals. One's trading at 10 times for no reason, just like a meme stock. That doesn't make any sense to me. Like you think that 2 things are the same, but they're not. And so that's where I love real estate, because you have that 1, arbitrage opportunity. 2, you can apply leverage without a margin call. And 3, you have cash flow, sustainable cash flow on a daily basis. It's a business that you run and operate, which is, I think, huge to the overall goodness of the strategy. Boom, 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 boom. I don't follow XRP, but cool. Crypto. I got a little bit of crypto, but not a lot. It's, I guess I have a lot compared to most people, but I have very little compared to my net worth. I've got several $100,000 in crypto, but that's nothing to me. It's literally a rounding error. So I keep a very small percentage in crypto. Whatever happens, that doesn't keep me up at night, but I don't have any XRP. I do have some Ultra tokens, UOS. It's like 7 cents a token right now or something. It was $2 a token at one point. A friend of mine got me into it. He's super bullish on it, so I don't know. I have obviously Bitcoin, Ethereum. Tony says, stock market perfectly reflects risk and reward. That's funny. That's hilarious, Tony. It actually doesn't perfectly reflect risk to reward. In fact, if you look on Monday, I was looking at some option stuff at Interactive Brokers, where Monday morning at 9:31, when the NASDAQ collapsed 6%, the VIX hit 67, there was contracts for Carvana that sold at 3 cents. Later that day, they sold for $18. So we had I don't know what the math is on that, but 8,000% variance. The contract that sold for 1 cent or 2 cents had a 99% chance of being worth $1. For some reason, it filled 2 cents and then filled at $1. The next fill was at $1. It just by fluke filled at a couple cents. Market makers do that shit all the time. There's a ton of risk reward imbalance, I think, in the market is the problem. It's supposed to be efficient, but it isn't. It's supposed to be priced effectively, but it isn't. Sometimes you put market orders in and it'll literally be massive variations in option contracts. I've seen some crazy stuff where $5 contracts just clear for 10 cents for no reason. When the underlying price of the share hasn't moved at all from the day before, but for some reason just clears crazy. The market maker just forces shit on someone to if you ever put a market option contract in, don't do that. Put a limit price. Do not put market, please. The market makers will fleece you. They will just take advantage of you and sell your contracts for half what they're worth. So that's if you're a market maker, there is sometimes some arbitrage opportunity there. It's crazy how fast risk and reward can shift too. But yeah, having an alpha in the stock market, no. I'll stick to real estate for me. I just don't have the expertise in that area. I don't want to develop the expertise. And all the people who I know who are good traders, they spend fucking 80 hours a week. They go hard at that. They're working on research, trying to develop a competitive advantage. Their life is stressful. I don't want that in my life. I don't know why I keep doing it, to be honest. I should just close my account and not even talk about it anymore. You guys keep engaging me to talk about it, but it's really not something that is a good return on time. It's too hard to beat the market. Randy says, when buying, rent, and hold, how do you know when the right time to refinance is? Well, there isn't necessarily a right time per se, but an example to refinance might be if you have another deal you're going to close and you need the capital and you know that you get that new deal can generate you a 4%, 40% return on capital and you can borrow at 5%, well, then the spread is obvious. Take the capital out of that existing equity and redeploy it into another property. Oftentimes, I use this example of would you rather have 1 paid off house or 5 houses with 20% down? Now, these 5 houses 20% down might cash flow $500 a month each. This one fully paid off might cash flow $1,500 a month. $1,500 a month with no mortgage, or 500, 500, 500, 500, 500, 2,500. So you make more in cash flow and way more in appreciation because this one house worth 200 and all these are worth 200, let's say as an example. If you have 5 of them at 200 a piece, that's $1 million in real estate you're controlling with the same 200 grand. You put $200 cash into one property or 200 grand across 5 properties, right? Because if you do 40 grand a property, that's your 20% down payment. You now control $1 million in real estate. If you have a 5% appreciation a year, this real estate went up 50 grand. This real estate went up 5%. What did I say? I think I said 200 grand. 5% times 200 grand, right, is is 10 grand. So it's a big difference there. You have 50% higher return with leverage. So you definitely want to use debt in real estate. If the properties you're buying can't cash flow and sustain and carry the debt, you're buying the wrong kinds of properties. Find out how to buy the right kinds of properties that produce positive cash flow. Maybe you have to look at Airbnb properties. Maybe you have to look at, room rentals or student rentals or some other market, multifamily. Look at something different in your market, or look at a different market altogether where there is cash flow. And then someone says, as equity accumulates, ROE drops. That's true. ROE is return on equity. And the more equity you have, just by definition of the equation, assuming that the rent is the same, you're going to have a lower percentage yield. Like I just explained, owning one property in cash versus 5 paid off. You want leverage. Leverage is good. The only time leverage is bad is if, let's say you owned like a 7 cap rate property and you were levering up with 10 cost of debt. So debt that was at 10% rate of cost, well, your asset was like 7% ROA or 7 cap. In which case, like every dollar of leverage you add actually reduces your overall cash flow. It only works if your return on asset from the building, the cap rate of the property, is higher than the cost of the debt. Now, for a short amount of time, when I flip, I'll often have a property that has, say, a 10 cap rate when it's done, or maybe a 6 cap rate when it's done, but it's currently a 10 or 12 from what I bought it at. And I'm borrowing like 10 or 12% for short-term open money. And the reason I'm doing that is because in the short term, that 10% cost of, or 12% cost of financing, whatever it is cheaper because it's an open term versus putting a 5% bank mortgage on there. And then, obviously being in a position where you have to pay breakout fees, because breakout fees on a bank mortgage are expensive. Even though the mortgage is 5%, you may end up paying $20,000 in breakout fees to refinance. So short-term financing, like the type of financing that I provide when I fund flippers, people come to me with flips. They say, hey, Mike, will you fund the project? I say, yeah, no problem. We'll put a first mortgage on it. We'll fund the project for you. When I do that, people are like, well, why would anyone ever want to pay you 12, 15% yield? Well, it's like, one, because I bring a lot of shit to the table. One, I bring expertise to the table. I help guide them. Sometimes I do consulting stuff with them sometimes it's extra. But 2, I don't usually do appraisals. I do my own in-house appraisals, which saves them $700. 3, there's the flexibility of that. Like if my term is open, it'll save them money and also time. Like how much time you spend putting together a bank mortgage application, going through all of the rigmarole to get approved. You might be closing this in 2 weeks. You're never going to get a bank mortgage in 3 weeks. You're like 6 weeks to get a bank mortgage. So if they got a fast closing on a deal from someone who just needed to close quickly, it can make sense. You build it into your deal. You bought it cheap enough. You can afford to bring in private financing. That's where people like me come in and do that. I borrow from private financing sometimes. I act as a private borrower often as well. So yeah. Garinder says, hi, Mike, hope all is well. When you first started out, how did you do all trades by yourself? By trades, I think you mean construction trades. So when I was just starting out, I didn't know how to do all the trades. I hired guys to do plumbing work and electrical, and I hired guys to do the flooring and the painting and all of that. And I worked alongside them and learned. So that's the way you do it, is you hire the trade and you act as their apprentice. And so my trades experience came from apprenticing under guys that I had hired. So that's just how it is. What ended up happening to your VIX short? I'm still holding it. So I held on through the pain. I think it was down 200 grand. I did a naked short on Friday, and the VIX spiked to 67, which was extremely painful. It's not come back almost entirely. So I've held on to that for the most part. It was a very painful roller coaster. It's very rare. Like the probability on a general day of the VIX hitting 65 is 1 in 10,000. So 1 in 10,000 days, the VIX hits that peak spike. Now, it was 20-something on Friday, so maybe it was an elevated risk of that happening. Maybe it was like 10% chance or 5% chance. And I should have hedged for it. I didn't. I actually brought hedges till Saturday, and they expired Saturday, and I forgot to hit execute, so I was naked for Monday. That was painful. Again, why I want to not be doing the trading stuff. That was so stressful. Like I barely slept that night just thinking about like, how do I unwind this position? Thankfully, it came down on its own. But yeah, just so much stress associated with the short-term volatility of the markets. It's just not for me. I much prefer real estate and business. And I get a higher ROI too. Like my time just doesn't yield me any extra benefit in the stock market. But if in business, if I spend 40 hours on a real estate project, I will make an extra $50,000 on that project. Like my time actually results in higher yield. My time trading back and forth, I don't get any better return than just buying the index. So in some cases, a worse return, right? Tony says, looking to deploy HELOC to write off for taxes on interest with marginal tax rate 47%. What are your thoughts? 100%. I've bought my last house My last house before that, I bought them in cash. I buy the house in cash. I go back for a HELOC. I refinance. You can actually Smith maneuver with a refinance too. People don't know this. You can actually just lock in a mortgage on the property as long as you take the proceeds from that mortgage and invest it in something. So if you own your house in cash and you go and you borrow against your house and you use that money to buy a business, to buy a property, to buy some stocks, to lend it out to someone else, that's an investment. All of that personal tax paid on your personal mortgage becomes tax deductible in Canada. And so I have a personal mortgage. I think my mortgage is like 100 grand a year in interest. That's all tax deductible against my investment income. So I basically use my personal residence to create a tax liability. The Smith maneuver is a fantastic maneuver in Canada. If you know how to work your cards right, like you can make like 100 grand a year tax-free in Canada. You can pay very minimal tax. You can sell your business for like $2.5 million, $1.25 million per spouse, completely capital gains tax-free. Everyone rags on Canada. I want to do a post just on like how I left Canada, went to the US for 5 months, lived there. So I've collectively spent 2 years of my life living in Florida. So I know Florida, I invest there, I'm familiar with the US, I've gone through the Bahamas and the US tax law a little bit, I've started to understand the culture around that. So I can speak to this exodus right now of people leaving Canada. There's a lot of investors going to the US to invest. There are a lot of problems in the US. There are a lot of things that aren't great in the US. And there are a lot of things that are great about Canada. Canada, in terms of raw potential, like if we fired Trudeau and the Liberals and the NDP and got them out and had a conservative government that was like, pro-business, pro-developing Canada's natural resources, pro-investing in what Canada has and what it has to offer, we have the largest quality land in the world. We have the most, it's like a property that is the biggest on the whole street. We have the biggest property on the whole street with the best fucking view on the water. The problem is the property manager, Justin Trudeau and the Liberals, have just mismanaged and misbudgeted and run up massive deficits and just poorly managed the economy in general. They've not produced stimulus that the business owners need. So capital is leaving Canada. That said, with some shift and change in policy, Canada is still one of the most desirable places to live. Culturally, we're way fucking better than the US. Are you kidding me? Like if you go out to rural Canada, you go to like Vancouver or you go to like Calgary, like forget Toronto, which is like, I think the culture is toxic in Toronto, but like there's a lot of places in Canada where the culture is still really good. Like, and people talk about like taking away our guns. Everyone I know in the country has guns still in Canada. We all have shotguns. We all have hunting rifles. Like most people I know in Canada have guns too. They didn't take away our guns. We still have guns. So like all these things I hear on these social media clips, like, oh, Canada did this, that. The capital gains tax that just came out this year, everyone's like ragging on it. It went from 50% inclusion rate to 66.67. That's effectively an 8% increase in your capital gain because it's the inclusion rate. So if your marginal tax bracket for the average person is like, and by the way, they say $250,000 a year per person every single year is still at the old 50% inclusion rate, which means that half of all capital gains are tax-free on the first 250 grand you make. The effective difference in that capital gains tax was an 8% increase net, because it's half of the 66, even less. If your marginal tax rate could be 40%, in which case it's 40% of that 16% increase. So you're talking about a 7-8% difference. Every 100 grand you make, the first 250 grand is unchanged. But after that, if you have you and your spouse, the first 500 grand you make every single year. If you can structure a sale of a property over 5 years, we're talking 500,000 per year. So $2.5 million. It really only affects the ultra rich. Like it does affect me a little bit, but like I'm not ultra rich. So it doesn't affect me that much realistically entirely. Right. So it's one of those things where like it is, it does have an effect, but it's not massive. And in terms of like financing in Canada, way better. We have CMHC government financing at prime -2. In the US, you're going to pay 7, 8, 9% for commercial financing. Here, you're going to pay 4. You're going to pay like, I think we're now almost in the 3s for CMHC financing. I bet you we'll start seeing 3.99 again. Our rates are significantly cheaper, like 40% cheaper for our interest payments on our debt here. So Canada's real estate market is attractive still in many ways. New build properties, anything built 2018 or newer, or new added units like ADUs, et cetera, anything built after 2018 has no rent control in Canada. None. You can go to your tenant, if you have a property built in 2019 or you tore down a thing and built a fourplex and you rent it out to 4 tenants and you've had them for 5 years, they've been your tenant, and now they're paying $2,000 a month. You're like, hey, I don't like this tenant. You're not under rent control in Ontario. There's no rules for new build properties. They're exempt from rent control. Your lease has just expired. I'm offering you to renew at $4,000 a month instead of $2,000 a month. People don't know that in Canada. If you just buy that kind of real estate, you buy newer built stuff, there is no rent control. There you go. Everyone's like, oh, Airbnb is banned, blah, blah, blah. No, it's not. You still buy hotels. There's still lots of ways you can do it. I know lots of people still Airbnb a ton of stuff. Like, there is a ton of great opportunity here in Canada. I agree that Canada has shitty management right now, and it has consequences for sure. It's still the best property on the street. I will still invest in Canada for the foreseeable future. I love Florida too. I love the US. I love what's going on there. I still think it's awesome, but there are a lot of negatives about places like Florida too, right? So, yeah. Next question. What is leverage in real estate, and can anyone make a leverage business? So leverage is one of those things where you could basically apply debt to something. Leverage just means there are lots of different forms of leverage. I did a video on this like 6 years ago. There's 7 forms of leverage in total. Like you can leverage people's time, you can leverage other people's time, right? You can leverage marketing, you can leverage other people's money. There's so many forms of leverage you can use, and I don't have the whole video, but there's basically 7 forms of leverage you can use to leverage different things to get a lot done. It's how billionaires make so much on their time because they're leveraging so many different things to maximize their ROI. But when I talk about leverage, I'm talking about leveraging other people's money, debt. And specifically the bank money. You want cheap debt. You want to, like, leverage can be bad if you're leveraging credit cards for high interest rate debt. That's dangerous. Don't do that. I'm talking about good debt. You want to apply and real estate is good for borrowing good debt. Good properties can sustain and qualify for 5, 6, 7% debt very easily. Even 4% debt now in Canada. We now have, I should talk about this at the start of the stream. Rates have fallen dramatically off a cliff. They're talking about a 50 basis point hike on cut on rates in the US this September. That's being priced in now. Talking about a 1% cut in rates, that's 4 25 basis point cuts in rate by the next 6 months. So rates are falling aggressively. Real estate takes time. It's very delayed. So the rate hikes we just had, and we went higher for longer for like 3 years, those effects are still hitting the market. So prices are actually still falling in real estate, despite the fact that rates are falling. So we are now in this is a once in a decade opportunity, maybe once in a 2-decade opportunity in Canada. In the US, prices didn't fall because there was 30-year fixed rate mortgages. Most people just held onto their property. There's actually not a lot of price movement in the US. In Canada, prices fell 30%, and our minimum wage spiked to $17.50 an hour. We have $17 minimum wage now. It was $10 minimum wage not even 10 years ago. So inflation is up 70% in Canada. That drives the cost of everything up, the cost to build, the cost of trades to maintain properties. All of that is bullish on pushing prices up. But prices fell 30% in Canada because no one could qualify for mortgages. We had really tight stress testing rules here in Ontario. It's very hard. You had doctors making $250,000 a year who would go for a mortgage on a cottage and they couldn't qualify. Bank's like, nope, sorry, we stress tested you at 2 plus the current prevailing market rate. That's the rule. It's 2% plus the current market rate, which was really high at the time. It was like 6, 7%. So they had to qualify like 9 or 10% interest, and they just couldn't debt service. Now as rates fall, they can qualify again. So no one could buy. It was a freeze of capital. Anyone who had capital was afraid to deploy it, and Canada fell. During that same time, since 2020, we've had inflation go up 26%. Real estate since 2022 has fallen almost 30% here in Ontario. And at the same time, we've also had rents go up 30% over that time. So rent's skyrocketing, which increases cash flow. We have debts, cost of debt, interest, reducing right now, increases cash flow again. We have prices that have fallen 30%, increases cash flow because you don't need to put as much money down. You don't need to borrow as much to buy the property. It's a smaller property, but rents are rising while the property is falling. So the imbalance in Ontario is starting to become attractive again. In 2022, there was not a single property that I looked at that was like, man, this cash flows well. This makes a lot of sense. When I stress tested it at 6% interest rates, it only made sense because debt was cheap. So I didn't buy a lot. I actually sold a lot of properties then. Now I'm penciling shit. Starts to make sense. The numbers actually work almost as good as they do in Florida. Because in Florida, you got high insurance. You've got, financing costs are brutal in the US. No one talks about that, like how hard it is to get financing in the US at a good rate. Like you will not get a 4% mortgage right now. You can get a 4% mortgage in Canada right now. You can't get a 4% mortgage in the US. At best, you might get an 8% mortgage right now. So we're talking like borrowing at 8% versus borrowing at 4% in Canada. That's a 50% lower cost of debt. When your ROA or your cap rate is 10 in both places, and there are places like rural, if you go in southwestern Ontario and you pick like Windsor or Sarnia or like Goderich, or you drive St. Thomas, just south of London, there's a whole bunch of like small towns where you can go and you can get great cap rates, the same as everywhere in the US. Like you can buy property for $150,000 in Ontario still. If you go to one of the more rural markets, it still exists. 150 Canadian is like 100,000 USD. good luck finding a property for 100,000 USD in most good US places, unless you buy like, the middle of nowhere in the US. Like there are some hick places you can buy. But I don't know. I still think Canada has a lot of good things to offer. I am bullish on Canada still. I think that long term, Canada is going to appreciate faster than the Midwest of the US, or like random places in the US that people are investing in that have these high cap rates. There is a reason that they have high cap rates. Yeah, I'm not gonna say they're shit areas, but like they don't appreciate well. Whereas I think there's places here in Canada where you can get really good cap rates and have the good appreciation. So I like the US. I don't want to like shit on the US. I'm a US investor too. I get it. Like I like it. But I'm not all out of Canada. I think people are dramatically like shifting their swing. They hate Justin Trudeau, and because of that, and they hate what the Liberals are doing, the NDP is doing, and they hate the cultural shift that we're seeing with immigration into Canada. And we do have some serious immigration problems in Canada. They took in 1 million people last year. We don't have the housing for them. We have major cultural differences. We have primarily Indian immigrants coming here, at least in my local city, that don't know how to, like I had some tenants that didn't know how to wipe their ass. They used to using a bidet and they didn't know how to use toilet paper and clogged the toilet paper system, flooded the toilet everywhere. Like there are differences living here versus there. And there's challenges that come with that. A lot of challenges. There's a viral meme right now about Indian immigrants shitting on the beaches here in our cottage country. They pop up a tent and they take a shit in the beach and bury it in the sand. That's fucked up. Like we don't do that here. That's a fucked up thing. I don't want to be racist here, but like there are some cultural differences that exist. And we have our challenges, and everyone's ragging on Canada. I think these people will assimilate nicely into Canada. They'll become part of the Canadian culture. We will change a little bit. They will change a little bit, and we'll meet in the middle. And at the end of the day, it'll be a win-win for everyone. And so that's my thought on, Canada in general. I think Canada's a great place. Has a lot of potential. I would love to see some major changes in Canada. I would really like to see the political landscape change and the business landscape change. Hello again from Alberta. I haven't connected yet. He was going to reach out. I remember seeing an email about Addy Invest. I have a cool project that's like a $10 million project, which I'm closing on for a hotel development that I think here in Ontario here would be a fantastic project for that program. I don't know what the cost of raising capital is. I heard there's like a 5% fee or something, which is crazy. Like imagine paying a 5% lender fee on a mortgage setup. So I'd have to look at the costs of doing it, but could still make sense. Yeah, I might still do it actually, just because it'd be a cool experience, but I'm sure it'd be expensive capital. It would come at an expensive cost, but it'd be a cool experience to build a track record on there and be able to show you guys, like, even if I did it for a small percentage of the project, like $1 million of the project or something, it'd be cool to have that, that public offering. So I might do it for a small amount just so you guys can get a little taste of the project. But yeah, we'll see. We will see. Short-term versus long-term rental, which is best? Both are good in their own ways. There isn't one that's better than the other. There's pro-con analysis on each one. And in every area and every property, there's a difference of what works and what doesn't work. So some properties lend themselves, like this one here, it would do terribly as long-term rental. This lodge here on the lake, like I would rent this for like $3,000 a month. I'm getting $30,000 a month on short-term rental. So the long-term rental versus the short-term rental is 10 to 1. Like literally I make 1,000% more revenue as a short-term rental. So this property specifically makes no sense as long-term rental. Now that doesn't mean that in some markets I've seen the Airbnb market is like 50% vacant and there's tons of issues and they only rent for like $100 a night. In that case, you're making $1,500. Maybe the unit only rents for $1,400 as long-term rental and you're saving a lot of headaches and damages and furnishing and all of the crap that goes along with short-term rental. There's a lot of different negative things that go with short-term rentals too. So pro-con, can't say one is better than the other. There are lots of properties where long-term rental makes more sense. Our motel in Florida, we're looking at, it has full kitchens and stuff. We're like, why are we Airbnb-ing this? We actually would make more doing a weekly rental on this to people who need a furnished place to stay. So sometimes longer monthly or weekly term guests can pay more because you don't have any vacancy and you don't have as much turnover and all that kind of stuff that goes along with that, and cleaning fees and all of the other additional costs that come with having guests come in and out and in and out in a short-term rental. So sometimes we pivot our short-term rentals to long-terms, and sometimes it makes sense the other way. So it's an analysis. You've got to obviously do the analysis and stress test and find out what works best for your math. And, that's, I wish I could give you a straight answer, but it depends. Next question. Do you have any connections for wholesalers? I do. I'm trying to think, in Chatham area. Yeah, I know a couple guys, not very well, but I could probably refer you to them. Drew says, what are your thoughts on the global unrest of immigrants coming into Canada and its effects on the real estate markets? Cheers, Drew from Brampton. You know, there is a big stink right now in Canada around the crime rates are rising like crazy in places like Brampton, as an example. Car thefts are up 1,000%. And a lot of the people getting caught are immigrants. And it's sad because, there's a lot of really good immigrants. My family are immigrants here from Europe, right? Like my grandma came over on a boat from Belgium, like a family from Germany, Belgium, from Europe, they came here, like my grandma's first language wasn't even English, so it's like, I was an immigrant at one point too, right? It's like, I get that. And like my grandfather is an example. I think he's from Michigan, but a couple of generations before, they didn't even speak English. So it's like, I can't say immigration is a bad thing. It's a good thing. It's what's made Canada so great is that we're so accepting. We take in so many people. We have a massive, amazing landmass. And as global warming kind of continues to prevail and things get warmer and better, Canada's going to get even better because it's warm here. And as it gets more tropical in Canada, more of our landmass is just amazing. So I think Canada's going to be great long term. I'm super bullish on Canada in the next 25 years. I really hope we shift away from this communist mindset and these terrible business economic policies politically. I agree, it's not a great landscape, but it will shift the other way. We're right now far left on the spectrum. We're going to go back right. The pendulum swings. It's just how it works. And to give up on Canada, now is the time you buy. When everyone's afraid, like no investors want to buy right now. So to me, this is like the time, Yeah, definitely, 100%. The stress of it is not worth it. I'm still actually down the trade, so hopefully it plays off. We're going to find out, obviously, the next couple of days. If the VIX does settle down to like 20, then I've won big. If it spikes again, I could get fucked. So that's the risks of trading. Don't do it. When PM doesn't know how to regulate, it's time to rid. I don't know what that means. I don't know what PM stands for. PM sometimes stands for property manager, maybe. Take a HELOC for your hotel up. There you go, Tony. So reach out to me. Yeah, actually, I could do that. There is definitely a place on this new hotel development to put your capital to work 100%. You could secure a mortgage on it or take on an equity position in the deal. 100%. That's something we could do. Send me a message at rosehartcapital@gmail.com. ROSEHARTCAPITAL@gmail.com. Hit me up for an email. We can chat more. I can send you an information packet on the deal. I'll put something together for you so you can get a flavor for what it's all about. And yeah, you can decide if you like it. If you do, and we can chat about where to invest. All right. So yeah, I technically can't solicit. I think I can only solicit people to borrow. So you'd have to secure as debt. I'm not, unless you're an accredited investor. If you're an accredited investor, then we can chat and you can go into this with your eyes open. I don't have a memorandum. I'd have to use like Addy Invest if I was raising small amounts of capital, which is why I typically raise like at least $250,000 or more from accredited investors when I do bring people into projects. So yeah. No, my last name is Rosehart. If you just click on my YouTube channel and subscribe, obviously you should see my name right there, ROSEHART. Everyone puts an E in it, but there is no E in Hart. It's Rose and then Hart, HART. Anyway, rosehartcapital@gmail.com. Thanks, guys, for watching the stream tonight. I appreciate everyone tuning in. My kids are running around like wild animals out there in the backyard, and they want to come run through the lodge here. And it's very open concept, so I've put them out by being in here and monopolizing the space, and that's not fair. This little renovation last year, put these brand new tiles in. We did a whole new kitchen here, 9-foot ceilings, 10-foot ceilings in this room. The laundry in there, it's pretty cool. We got a big garage over there. Cool. All right, guys, I'm gonna wrap this stream up here. Appreciate everyone for tuning in. Thank you for being a part of it. I'll leave you guys with a little view of the water here before I go. Can you see that? Oh, there we go. I'll leave you guys with one more little video because yeah, I used to be the youngest retiree. Now I'm like 31 now, so not so young anymore. 7 years in live streaming. Check these out. These are solid beams. They're like real tree trunks. Go up to 30-foot beams. Watch this. I love this cottage. All right, see you guys.